Thanks for joining us, and here are business stories making headlines at this hour. I am Perpetua Fasami Peter. Now the news in detail. The Central Bank of Nigeria, CBN, has raised the monetary policy rate MPR from 13 to 14%. CBN Governor Godwin Emefiele announced this on Tuesday during the 286th meeting of the Monetary Policy Committee (MPC) held in Lagos. According to him, it was the right option considering economic realities. In his words, quote, "The committee resolved that the most rational policy option would be to further strengthen its tightening stance to effectively curtail the unabated rising trend of inflation," end of quote. While the Apex Bank increased the MPR rate, it however retained other parameters. The asymmetric corridor remains plus 100 and minus 700 basis points around the MPR, as well as cash reserve ratio CRR at 27%. Tuesday's rate hike marks the second time the MPC will raise the interest rate in 2 months. The MPC increased the rate from 11.5% to 13% on May 24. CBN Governor Godwin Emefiele has also said that the bank paid eligible exporters over 20 billion naira rebates in the second quarter of implementing the RT200 FOREX program for exports worth $600 million. Emefiele said, and I quote, "We are delighted that the race to $200 billion is yielding good results under the RT200 program, because in the data that we have so far, we found out that we have received inflow as of June this year of over $2.9 billion. Exporting earnings are increasing, and we have calculated that at some point, we will get to a point that the banks will not even need to come to the CBN to buy foreign exchange for the need of their customers," end of quote. It will be recalled that in February, after a meeting with the Bankers Committee, Emefiele announced the RT200 FOREX program to boost forex supply in the country through the non-oil sector in the next 3 to 5 years. He explained that the RT200 FX program was a set of policies, plans and programs for non-oil exports that would enable the country to attain the $200 billion goal in forex repatriation exclusively from non-oil exports. The Debt Management Office, DMO, has stated that it raised 1.367 billion naira from the federal government savings bond auction held this month, bringing the total value of the amount raised in the year to 8.824 billion naira. Investors had put in 451.037 million naira in the 2-year savings bond, which was raised at 8.075%, and 915.865 million naira in the 3-year paper, raised at an interest rate of 9.075% per annum. The federal government of Nigeria savings bond, which was introduced by the DMO, is specifically designed for retail investors and to encourage financial inclusion, with investors being able to invest from 5,000 naira. Last month, the DMO raised 1.874 billion naira from the savings bond. In June, 701 retail investors had put 769.92 million naira in the 2-year savings bond, which was raised at 8.205%, while 621 investors had put 1.104 billion naira in the 3-year bond, which was raised at 9.205%. A total of 1.106 billion naira had been raised in May this year, with investors putting 748.45 million naira and 358.01 million naira in the 3- and 2-year bonds raised at 8.934% and 7.934% respectively. The newly unveiled Nigerian National Petroleum Company Limited, NNPC Limited, will soon reveal the huge asset base of its current status. This was disclosed by MELE KYARI, Group Chief Executive Officer of NNPC Limited, at a media chat after the presidential unveiling of the new NNPC Limited at the Presidential Villa, Abuja. KYARI stated that the company's organizational structure would be changed to get different results, while more competencies would be embraced as it continues its obligations towards paying subsidies. He stated that its new structure would translate into ensuring dividends and delivering energy being loaned by shareholders. On subsidy, he said the NNPC Limited had no issue with it, rather it would be an issue of the state. In his words, whatever is the decision and policy of the state, the NNPC is there to deliver commercial value to the customer at a price that the state wants, End of quote. President Muhammadu Buhari, while unveiling the company, stated in his speech that the company would also support sustainable growth across other sectors of the economy as it delivers energy to the world. The Trade Union Congress of Nigeria, TUC, has urged the federal government to be transparent in the implementation process of the Petroleum Industry Act, PIA. TUC President Quadri Olaleye made a call at the 12th Triennial National Delegates Conference in Abuja. Olaleye appealed while commending the federal government for signing the Petroleum Industry Act into law. In his words, "We urge the government to pay attention to job security, decent work, staff pension and gratuity, condition of service and other social obligations." End of quote. According to the TUC president, though it will be difficult to end illegal refining activity in the country, it is unfortunate that Nigeria is the only country that imports what it has in abundance. On ending gas flaring, Olaleye called on the government and stakeholders to convene a gas summit immediately to end the national embarrassment. He also urged the federal government to summon the political will to name and shame all the sponsors of terrorism in Nigeria. The Minister of State for Petroleum Resources, Timipre SYLVA, at the unveiling of the new NNPC Limited on Tuesday, said the federal government has disclosed that Nigeria only received 4% of the $70 billion investment inflows into Africa between 2015 to 2019. He stated that President Muhammadu Buhari's administration as president never concealed its desire to create a more conducive environment for the growth of the oil and gas sector and to address legitimate grievances of communities most impacted by extractive industries. He added that the unveiling of NNPC Limited is a new dawn in the quest for the growth and development of the Nigerian oil and gas industry, opening new vintages for partnerships. And moving on, the African Development Bank Group and the Securities and Exchange Commission, SEC, have announced the signing of a $460,000 agreement to support the acquisition, installation and deployment of an automated surveillance system to protect the capital market. Speaking on the import of the deal, stockbroker and business analyst Charles Fakroha said it was a welcome development while also highlighting the implications.
To say that it is better late than never, that will not be 100% correct, because I know that SEC, in their traditional role, they've also played that role of protecting the investor. And I know, and I will tell you with authority, that even the other SROs, that is the security exchanges that are being regulated by SEC, they have a very strong surveillance equipment, very strong, that whatever you do in the market is being monitored. And like we say, we as traders, whatever you don't want anybody to see, please don't put it in your machine, because the surveillance system is there to capture everything that has happened in the market. So when you see that regulators, you think regulators are not doing anything at the back end, a lot of surveillance is going on. And in fact, there's even parts of our training that we train young stockbrokers to understand that surveillance and monitoring is key to them playing the role as a trader. Because at that early stage, when you come to the profession, you understand that in faction, there is 0% tolerance for that.
The Board of Directors of the African Development Bank Group has approved a $134 million loan for the growth of agriculture, Agro Pocket program in Nigeria to scale up food production and boost livelihood resilience. The AFDB said the program will support the fast tracking of the implementation of key policy and institutional reforms and boost private sector participation in agriculture.